Digitalization of financial services is absolutely at the front of everyone's mind. That banking institutions, I think, around the world brought forward about 5 years of IT spending into 2020, and that we're seeing some effects. And the more and more digital we get, the more and more digital I think we can take advantage of in this space. And Chuck, I probably wouldn't necessarily say that fear is a bad word when people look at AML, because that's a pretty appropriate term. But we have to get comfortable with it, and we have to look at the changes in supervision that we need to make to keep on top of that. And that requires some new hiring, some new training, some new development on our side to make sure we keep pace with the future of finance.
With the right technology for your institution, you will be able to automate and make your processes more efficient, right? Which in turn allows you to be able to, open up capacity to meet the demands of the changing regulations. It also, technology also, will support the effectiveness goals that you've already established by, again, automating the steps that might have been, manual at times.
Criminals, as you said, are operating across multiple institutions and find it very easy to evade the detection of single institutions. And of course, the analytics possible within silos, within single institutions, are very limited because you're working on effectively fragmented data of a network of crime. And the efficacy of that analysis will obviously be much poorer compared to analysis over the system as a whole. But despite that logic, there is only now, in recent years, a policy drive in a number of countries to consider how private information sharing could work.
So we should be consolidating the elements of KYC that have a bearing on risk into a unified view in real time rather than staggered updates between systems. And AML data should also be linked into CLM and CRM systems. Above all of this is about further digitalization and transition away from laborious manual tasks, and these are things that are ripe for automation. And we can see things like biometrics have become normalized through their mass adoption. On the other hand, having a sort of a knee-jerk reaction based on prohibition, such as a moratorium, which was being discussed early last year, isn't a great idea either. At the leading edge of combating financial crime is forward-looking through predictive modelling. And this approach is long established in many areas, but in crime represents some pretty terrifying science fiction scenarios like a Minority Report style pre-crime. Of course, there's no need to be hysterical about this development, and while it brings with it many data protection and legal complications, we should benefit from improved crime detection and prevention. And this is an area where AI and machine learning are in their element, and I say that as someone who has some healthy skepticism about the grandiose claims of screening vendors, all of whom seem to be using AI in some form.
AI and machine learning concepts are truly a brave new world for M&T. We're just at the beginning phases of what I see as a journey in exploring artificial intelligence and machine learning concepts, especially in our BSA control area. We're exploring and at least considering deployment in a few areas. First, AML transaction monitoring. We're deploying in customer segmentation, but also considering AI for data enrichment and for improving alert efficiency. We're also exploring AI concepts in customer screening. So when I say customer screening, sanction screening, politically exposed persons, and negative news screening. Mainly with a focus on trying to improve alert volumes, so an efficiency play. We found that the negative news and politically exposed persons customer screening is really a fertile ground to kick off many of our innovation efforts. And primarily, that's you mentioned the regulators in the intro. I think that's one of the main reasons why when we do our negative news and PEP screening, this is an area where there's not a lot of regulatory. It's really used to supplement a lot of the due diligence work that we do. So this means our examiners have been really less critical of us in this area. But it's also a space where we've seen significant inefficiencies in terms of false positives, especially with our rules-based approach in the past.
I genuinely believe that a benefit of AI is it will make us far more quick to market with solutions for the problems we're seeing.